right. Well, good morning, everybody. Thank you for joining us. I'm Marty Rosendale. I'm the CEO of the Maryland Technology Council and a member of the Newport Partnership. The Maryland Technology Council is the industry association that represents all the technology and life science companies throughout the state of Maryland, and this is the Capital M podcast. We're trying something new we haven't done before, given that we're all dealing with new working environments as a result of the COVID-19 pandemic. We have decided to do our podcast by video, and joining me today are two representatives from Truist. Truist is the bank that was formed with the merger of BB&T and SunTrust. We have Jay Turakhia, who is the Senior Vice President of Business Banking in Maryland, and Eric Rosenberg, who is one of the bankers that is spending all of his time today trying to help companies address all of the challenges related to the stimulus packages and the loan and grant opportunities that are coming out of that. So, gentlemen, I want to thank you both for your membership and your support of the Tech Council, and thank you for your time this morning. Just to give you a sense, it looks like we have 41 participants that have dialed in and are interested in what the two of you have to say today. So Jay, maybe if you just take a minute and tell us about yourself and tell us about Truist.
Sure. Good to be with you, Marty, and thank you for the opportunity to be on here. So again, my name is Jay Turakhia. I head up business banking for Truist for the state of Maryland. Marty, as you mentioned, Truist was the merger between SunTrust and BB&T, which happened last December, in December of 19. And once that was finalized, Truist officially became the 6th largest bank in the country and the 2nd largest in Maryland by asset size. So my day-to-day job at Truist is overseeing the team that directly interfaces with the small to mid-sized businesses that we support. The primary job of the folks on my team is to manage the relationships of those small to mid-sized businesses. So that could include a variety of different things: access to capital, treasury, liquidity, foreign exchange. But right now, I would say my job, their job, everybody, frankly, in the bank's job, is solely focused on how we can provide support and relief to our clients, because there's so much information that's out there. It is ambiguous, it is confusing, it is changing in real time. And what it looked like on Tuesday is different than what it looks like today. And what it looks like today may be very different than what it looks like tomorrow. So on the professional side, there's still a lot left to uncover. On the personal side, my father runs a small business. He's a doctor, solo practitioner in internal medicine, and he's being affected by COVID-19. So we're looking at banks, we're looking at grants, we're looking at the state programs, we're looking at the SBA. And so I've got kind of a perspective on both sides of the coin here. So I'm happy to talk to everyone today and be very transparent about what we know, and also very clear, very honest about what we don't know.
Jay, thank you for that. One thing I forgot to mention, all of the attendees on the line today, if you have questions during the first part of our presentation, please put them into the chat box, and Eric will monitor the questions and answer them as we go on. And then when we get to the end, there will be a Q&A period where we'll ask you to raise your hand if you have a question that you'd like to ask, and you'll be able to address your question directly. Eric, why don't you take just a second and introduce yourself as well?
Sure. Good morning, everyone, and I echo Jay's comments. Thank you for making time this morning. My day-to-day responsibilities very much echo what Jay had just mentioned about each member of his team. I am one of 13 that work with Jay. Just a little bit about me quickly. I actually started my career in banking while I was in school in August 2007 when I started as a part-time teller. And in that time, I've held various roles supporting businesses of all sizes, basically. I joined the bank, SunTrust, going on 2 years ago, and I've been working closely with our teammates to get through this merger. And also for me on the personal side as well, I grew up multiple generations of entrepreneurship. My father is a small business owner today in an advertising agency, and he too is facing 2 months of complete lost revenue, and is trying to solve for the problem right now of how does he keep his people employed. So just like Jay, I've been closely monitoring the situation, trying to understand how to help not only my clients and my teammates, but my family as well.
Great. Eric, thank you. So there's been a lot of information out there about the stimulus packages, about the CARE Act. Everybody has their own resource center. There's webinars everywhere. We're trying to do something a little bit different, make the conversation a little bit less formal, and get to some of the meat, if you will. Jay, before the call, you and I were talking about a statistic that I just find amazing, and that is the SBA in a normal year typically will issue or support $25 billion in loans over 365 days, over a 12-month year. But now they're being asked to support $349 billion in loans in 3 weeks. What is that doing to the banking industry? What's it like to be a bank and a banker right now? What are you all experiencing?
Yeah, that is a really great question, Marty. And it is a good example of what has changed from Tuesday to now. So originally, banks, Marty, were asked to be a facilitator of the program. They would be call it the intermediary. They would stand up online portals. They would have automated decisioning from the SBA. The onus of the collection and the application would fall onto the bank, but the due diligence, the verification, the liability, so to speak, would really fall onto the SBA. And it would be a high-tech, high-volume approach, which in theory made a lot of sense. Online portals, so to speak, can be built for speed. They can be built for volume. They can be built for automation. On Tuesday, all of that changed. Banks now are not meant to simply play the role of a facilitator. They are taking on a significant amount of liability for the process. So what does that mean? That means banks need to be the ones verifying the historical payroll. They need to be filling out the AML, anti-money laundering forms. They need to be verifying what we call KYC, know your customer, verifying character, verifying eligibility, also using the formulaic approach from the SBA to calculate the right amount of financing. So while what's out there is 2.5 times payroll, there's a lot more that needs to go into that to determine how do we actually look at what that is. It's not necessarily as simple as taking the payroll and saying 2.5 and that's the number. What is eligible to be considered in that? How do the banks underwrite that? That's what falls back onto the banks. So I've been told that by tonight, hopefully the SBA will provide us a little bit more guidance in terms of what they're looking for. But to summarize, Marty, banks everywhere are being asked to design a due diligence process, stand up the online portal, internally shuffle personnel to meet that volume, and then begin processing and underwriting these deals within about 24 hours. So if it sounds extreme, it's because it is. And to your point, Marty, about the sheer volume, you're absolutely right. The SBA did $25 billion annually, and now they're being asked to do $349 billion in the next 3 weeks, 4 weeks, 5 weeks, and that is a very heavy lift. And it's not like we added a ton more in the arsenal. We're working with what we have. So there is a lot of unknown and a lot of trepidation around what will that actually look like when the systems go live, given the sheer scope of it. So it's certainly something to kind of for us to really think through. And that's why we've been really methodical and organized in our bank. And a lot of the major banks have been in direct conversations with the White House and the Treasury, trying to figure out how can we make this process easier, because it is not as simple as flipping on a switch and then we're going to go. And to the last part of your question, Marty, what does it feel like to be a banker right now? There are a couple of different things. One, it feels galvanizing because banking has become so transactional. Relationship banking was kind of lost amidst all the technology and self-service options that are out there. So to a degree, it feels good to be able to provide value, but at the same time, it feels very paralyzing. Every client is asking questions. Multiple clients have filled out the application that they've seen on the SBA website and they have sent that in. Everybody wants to be first in line. They want answers. My father wants answers. He told me last night he's got his quarterly filings for his payroll. He's got all of his financials. He's going to go to the bank and just drop it all off, and boom, just like that, he's done. And as much as we want to tell people it is that simple and that is what they want to hear, that's just not the truth. We don't know yet what that process is going to actually look like. And so we can't say declaratively it will be that easy. So yeah, I would say it's definitely an interesting time for the entire banking industry.
Great, thank you. So Jay, I want to come back to that in the context of being a little bit more specific. But before we do, let's get into the Paycheck Protection Program. Could you give us?
Sure.
I think most people know what it is, but maybe just very quickly a high level view. What is the PPP?
Yeah, I can kind of just do a quick flyover of it because you're right. There's so much information out there, but essentially in the CARES Act, the 880 page bill, there's a really important section called the Payroll Protection Program, which represents about $350 billion of the overall $2 trillion package. And the purpose of this, to kind of just summarize it, is to help those businesses that have been hurt by coronavirus. So in other words, and just to be clear, it is not to start businesses, it is not to do any kind of acquisition financing, it's not to help businesses that were struggling before. If your business was impacted by COVID-19 in a negative way, which many businesses were, and you have under 500 employees and you were in business prior to February 15th, you're eligible. So under the PPP, eligible recipients may receive up to 10 million. Now, and that's a number, Marty, that is probably in all the headlines. And maybe it is possible for a company that has 48 million on payroll on an annual basis to qualify for up to 10 million. But a more realistic number applicable to most small businesses that are not seasonal is essentially, take from what the SBA has said, take your average payroll over 12 months, multiply it by 2.5. So let's say, Marty, your average payroll in 2019 was 40K a month. Multiply that by 2.5, that loan amount would be 100,000. And that is what the SBA application that is on their website has called for. But still, there's a lot left to be desired in terms of how do we verify what actually goes into that number. Because we have been told payroll costs can be commission, salary, wages, healthcare, vacation, medical, state, local taxes. The SBA has kind of an early list. And importantly, employees are capped at 100K. The loan proceeds of the PPP, Marty, would primarily be going towards paying payroll, but they could also include mortgage payments, rent payments, and utilities. Loans in this program would be deferred for 6 months. And there's a lot more detail there, Marty, and I think you sent out the link that kind of has a 2-pager that really goes through the highlights. But the main question that probably is on most people's minds is, do I have to pay the money back? And so the SBA has said, yes, loans can be forgiven with the appropriate documentation of expenses. What is that appropriate documentation? That has not been made clear to the banks. A lot of speculation is out there, nothing concrete or written in stone. The SBA has also said that the majority of the forgiven part of the loan would be going towards payroll. But again, the details here are not clear in terms of what is the official policy, what documentation will be required, what are the restrictions. And there are some formulas out there. A lot of people have been using the U.S. Chamber of Commerce one. But until we look at it as a bank, we can't really comment on that forgiveness piece.
Yeah. So Jay, there have been a lot of developments over just the last couple of days. In fact, it was either yesterday or the day before, the SBA sent out a sample application, and people have a lot of questions. So maybe you could give us a quick update. What have the recent developments been? And you mentioned that there's still information that the banks don't know. So what's still unknown at this point? What are you trying to get clarification on?
Sure. So I'll start with kind of the most recent developments. And the latest development, again, was on Tuesday with how surprised banks everywhere were with the dramatic changes that were made to the program in terms of the collection of paperwork, the KYC, the AML, the liability shift onto the banks. And so you might say, Jay, well, the SBA is guaranteeing 100% of the loan. Where is the real risk or liability? And if a borrower defaults, the bank would be made whole anyway, right? Because it's 100% guaranteed. And that's a logical thing to assume, but I would tell you that with traditional SBA financing, like the 7A program or the 504 program, the SBA guarantees in those programs about 75% of the risk. So in essence, that means banks are allowed to do deals that they otherwise would not have done. However, if the loan defaults and the paperwork is not right, if it is not properly documented, if you miss something in your due diligence, the SBA historically does not pay out that guarantee. So again, that development on Tuesday about how judicious and careful the banks need to be in underwriting this, which we did not believe was the case before, that was huge. The other big development was that changed on Tuesday night was that originally this program was set up to be up to 4% in interest up to 10 years in terms of the term. And that changed to 2 years and 50 basis points. And so that's a big deal, not only from, of course, 50 basis points from 4%, that's great for the borrowers, and that's a positive benefit. But the 2-year term, that creates a lot of questions in terms of, well, what do monthly payments look like on a 2-year term? Is it amortized differently? At the end of the 2 years, if the borrower needs to refinance, what happens then? What happens to the SBA guarantee? We don't know those answers right now. And so when I talk about how fluid the situation is, that's a good example of what I mean. Such dramatic changes that have happened over the past week, which creates so many questions with very few answers. And in terms of what still needs clarification, I was on the phone with several of my peers at other banks last night, and we were all talking about some of these questions. How are you going to take an application? Is it an online portal? Is it a setup? Can I go into a branch? What's the process? TBD, to be determined. How will you calculate the loan amount in terms of what documents are you asking for and verifying to look at that 2.5 times multiple that was laid out? That's kind of a broad question, but how are we all going to adhere and underwrite to the same standards? And what are those standards? To be determined. How and when will you process loan forgiveness? That's such a big part of this. And a lot of people believe that there is free money on the table, but what are the mechanics of how the banks will actually process the loan forgiveness? And will it come from the lender itself? What's the SBA's involvement? Still not answered. And how are you prioritizing borrowers? We had a lot of good conversation about this last night. Again, the banks, my banking peers across the industry, how are you prioritizing borrowers? Are you going customer only? Are you focused on new business and prospects that don't bank with you today? What does that process look like right now? Still to be determined.
Great. So Jay, with all of that, and it's a lot, what should a small to medium-sized business be doing right now with respect to a PPP loan?
Sure. So, well, I'll answer this kind of in two ways. One with the PPP loan, the other with just general guidance on what we think small businesses should be doing right now. So as it relates to a PPP loan, there are a lot of banks there. Let me preface it by saying this and dispel the notion. No bank has a head start over another bank right now. No bank has more clarity or less clarity than any other bank. And I want to make that a very clear point, because there are a lot of banks out there that are sending clients the application. They're sending them checklists about their payroll, their healthcare costs. They are asking them for their 12-month financial kind of look back. And so there's just a lot that's out there right now that banks are asking of their client. And all of that could be relevant, and it might be good to have on hand. It might be good to have on hand your articles of incorporation, your recent utility statements, those 12 months of financials ready. But we don't know yet what is the exhaustive list of what the SBA might require. Those are good indicators, and they very well could be relevant. Does it hurt to put that stuff together? It does not. But we do not yet know what that exhaustive list of documents will look like, because the SBA has not been clear about what does the full, complete, comprehensive list look like. So a lot of what's being asked of small businesses right now to put together in some of those things, again, the 12 months of financials, the articles of incorporation, the quarterly payroll costs, the healthcare costs, recent utility statements, those are guesses based off of historical SBA programs that we believe would be relevant. But again, not official guidance, nothing that's not an exhaustive list. So from the PPP program, that's what I would say. But there's a lot there to unpack in terms of what should a small business be doing right now. And so if I might camp out here for a second, the first thing is to look at all the options on the table, right? So the PPP is one option. The state grants, the SBA grants, the EIDL loans, those are all good options. And you can use, and this problem that a lot of businesses are facing very well is not met with one single solution. It might require a patchwork of these different options that are out there. And the PPP program is the star of the show right now, but don't forget about what's out there. And every day, new information is coming out about other grants that are being offered, other organizations, like, for instance, Facebook, that's offering $100 million. That information is out there. It is good information, and it's important for businesses to be educated and educate themselves on what's being out there and how they can take advantage of it. So that's kind of one piece of it. And then there's just some general practical advice, Marty, that in kind of preparation for our conversation today, I came up with 10 questions that I think every small to mid-sized business owner needs to be asking themselves. So if I might, Marty, I can run through those fairly quickly.
Yeah, please.
The first one is starting off with your fixed expenses. What are they? How much are you spending? And importantly, what are you spending on? What is truly fixed? The second question is, have you made a list of your creditors? And have you talked to them in terms of understanding how are they supporting other businesses like yours in the situation? Can they extend terms? What are they doing? And what is that exhaustive list? The third is, have you called your insurance company to talk about the business disruption policy? It may not be covered, but it's worth the conversation and to see how they're handling it. A lot of changes in that industry are happening right now, so it's important to stay up to date on that. The fourth is, when was the last time you really looked at your accounts payable and your bank statement simultaneously? Is there anything that is on autopilot right now? Is there any payments that are being auto monthly drafted out of your bank account? Every dollar matters right now. So really taking a fine-tooth comb and going through your expenses, that's really important. And shutting down expenses that are getting auto debited if they might not apply. Fifth question is, what loan payments do you have now that could be deferred? What about rent payments and talking to your landlord? What has their position been? The sixth question, when you look at your debt, could it be consolidated for a longer term and lower monthly payments? Have you talked to your bank about what that option might look like? And the last few questions are a little bit more outside of the box, but I think are still really important. Starting off with, what is your cyber risk? A lot of your employees probably now are working from home, and how are those networks protected? So Marty, you know that I serve on the board of the Cybersecurity Association of Maryland, and cyber crime, as most people know now, is extremely high. And phishing scams, ransomware, email hacks, all-time highs. So how are you staying protected? How are your employees staying informed? What about your contract risk? If you've got long-term contracts in place with suppliers or vendors, what clauses are built in right now to address what's happening now? Are you reviewing those contracts? And finally, last couple points, if you accept credit cards, are you PCI and EMV compliant? And if you are now suddenly working at home, what manual or paper processes can be performed electronically, like invoicing, using a lockbox, migrating your checks to card? And again, how are you staying secure throughout? So those are the things, for a small business, I would put a lot of thought into. And I can send you these questions, Marty, as kind of, the 10 things that I would really focus on and ask and go through the exercise. We have found that a lot of folks that we've talked to that have gone through this exercise of asking kind of this introspection of their business have been surprised. And so I certainly think it's an exercise worth pursuing. And the final thing I'll say on this last point is every business should know, what is your monthly requirement in terms of how much do you need to bring in to meet those fixed expenses to keep the doors open. That's going to truly determine what is the right amount of financing you need. A lot of businesses, again, have gone through that exercise and found that the situation is not as bad as they might have thought originally, or they might need a different level of financing than they originally anticipated. And it's extremely, extremely important that every small business understands exactly how COVID-19 is impacting their business. They can explain it. They can logically say, I need X amount of relief based off of these calculations. So it is not just kind of a broad answer, but it is more tactical and specific in nature.
Mm-hmm. That's great, Jay. Thank you. And if you would send those questions, I'd appreciate it, because we can make them available to our members and others that would be interested. So I want to come back to, you mentioned that no bank has a head start over another bank, but some banks are not historically SBA lenders. And I've heard things like, if your bank is not historically an SBA lender, and you want to switch to another bank that is, then you have to deal with the know your client regulations that could take a week to get through, or other delays. And at the same time, banks that are not historic SBA lenders are becoming SBA lenders. They're being allowed to be SBA lenders through this program. What should somebody be thinking about with respect to this? What if their bank is not currently an SBA lender?
So it starts with asking, there are 1,800 SBA lenders out there. And you're right, not every bank is an SBA lender, but the SBA has said, and the Treasury has said, it is moving to make every FDIC insured lender to make this PPP program available to those FDIC insured lenders who maybe historically were not SBA lenders. So it starts with asking. The SBA also has a link to SBA lenders, that 1,800 list. But again, being fully honest with you, Marty, and everybody on the line, banks right now are in a position where they are looking at the clients that are in front of them because there are a lot of clients. And because of the anti-money laundering and KYC requirements that they already have on file for their existing client base, that is the reason why they are starting with their existing client base. To look at someone that does not bank with you, where you do not have all that information on file, is a much more arduous process. So my advice would be to ask your lender, ask your bank if they are participating. And again, just because they haven't done SBA in the past is not an indication that they are not participating, because the SBA and the Treasury has said that they are trying to make this program available to any bank that is FDIC insured, credit unions as well, and some of the farmer banks in the more rural areas.
Mm-hmm.
Great, thank you. So my next question, Jay, is a question that I've gotten from people in many different ways. Basically, the question is, how much of a race is this application process? But fundamentally, what people are asking is the money going to run out?
It's a fair question, and it's $1 million question. I don't know. And the real question is, will the money run out? And then really, what happens when the money runs out? And so again, the honest truth is, we don't know. Nobody knows. If the money will run out, there are 30 million businesses, small businesses in the United States today, and 1 million of them apply for $350,000 in financing. That $349 billion is depleted. So then what happens next? We don't know. But it's a good question. It's one worth asking. But being as honest as I can, there hasn't been any sort of indication as to what would happen if the money runs out.
Great. So we're coming up to our 30-minute mark here. Jay or Eric, is there anything that you'd like to talk about that we haven't covered so far?
Sure. And then I'm going to turn it to Eric after I say a couple of comments, because Eric is on my team and he's on the front line. So he is directly dealing with businesses on a day in, day out basis. He's talking to clients and seeing it firsthand. So the first is the one comment I would say is that it is really important to have to either rekindle or double down on your banking relationship right now. And not just for the reasons of understanding the program, but remember that your banker, whoever they might be, is very plugged into the community. They are seeing organizations giving grants. They are seeing businesses being impacted. They are probably deeply networked with attorneys and accountants and, of course, their own clients. So talk to them about what you are seeing, explain the challenges that you are having. Outside of being transactional, you might find that they can provide value in more than just the conventional or transactional ways. And again, I will defer to Eric in terms of elaborating on that a little bit from what he's seeing. But I do think that is that's very important. And again, the last kind of parting words there would be, talk to your bank as a starting point, because that is going to be likely the path of least resistance to move forward quickly because of the AML and KYC requirements that are being laid out right now. Now, again, this is the information that we have today, and there is more that we don't know than there is that we do know. That's just the truth, and that's banks everywhere. That information could change. It could change throughout the course rapidly today, because the April 3rd date is the kind of deadline that the Treasury has set in terms of when they would like applications to start. So there is a lot of moving parts. And we've been talking right now, Marty. I've gotten maybe 8 or 9 emails just on the changes that are being made as we speak in real time. So it is a fluid situation. Keep that in mind. And also keep in mind with your bank, I think banks everywhere, they want to help and they want to do this quickly, but understand kind of the position that the banks are in is also unprecedented in terms of how do we manage this the right way and be methodical around this process. And so just go into that conversation with the appropriate expectations. And I think that will go a long way. Let me turn it to Eric on my team to provide some color on kind of what he's seeing from clients, and then we can kind of open it up to the group and talk through any questions.
Yeah. Well, and first of all, I want to thank the group for being so engaged. And I apologize if I either A, have not been able to directly answer your question, or if I just missed it, because I got a lot. But taking a few notes along the way, and I just want to give just a general sentiment here, in that your banker should be your advisor, invested in your success, because your success is truly our success. So there was a question that actually just came up here. It said, it seems that banks do not make much money to process these loans. What's the incentive for banks to help approve the loans? Is it better to deny loans to reduce the bank's risk than approve loans? I mean, it's a great question. And to the point that Jay had made a few minutes ago, if we were transactional and we're only looking at the return on investment for each specific transaction, sure. Why would anybody do a transaction that loses money? The reality is we are a critical part of the ecosystem. We are here to stand behind our clients and support them the best of our ability. And if it means losing a little bit of money on a specific transaction to help our folks be successful so we can share in that success, that's ultimately why we're going to do that. This also brings me to another point too. You know, there's been a lot of fear mongering about the money running out. Remember, you know, I like to use the analogy that the PPP loan is just a single bullet in the chamber. It is not a silver bullet. It is not the only solution. So as we're all going to stay updated around how this process and this product will evolve, remember, there's so many other options out there. Many questions about the IDL have come up, right? The economic impact disaster loan for not-for-profit organizations out there. There are grant funds that are available, and there are traditional financing options out there as well. Specifically, I was talking to a non-client yesterday who I have a good relationship with, and they had talked about their bank who was trying to renegotiate a covenant structure, and the general feedback that I had there was maybe that covenant shouldn't exist. So coming back to Jay's point about working with a banker and identifying, you know, who the right partner is, I would say, number one, if you have a banker today who's been proactive with you, who has been supportive, and who has gone above and beyond, then that is the partner to stand behind right now and to have on your speed dial. If you are one of the 86% of small businesses that have not been proactively called by their banker, I suggest reaching out to your banker, identifying or asking some specific questions. And if there are some challenges around how they can help you, feel free to reach out to us. We'll give you free advice. And then along the way too, as Jay had mentioned, there are specific things that we have access to that aren't just bank products. For example, one of my clients mentioned to me the other day that he hasn't had a specific impact, but because of his supply chains, he might have an issue getting supplies to take on what he thinks could be a rush of new jobs in the next 2 to 3 months. I called a friend I have who's a supply chain consultant, got some leads about material suppliers and passed them along his way. Clients have asked questions about what to do with their landlords. You know, I have friends in the real estate business who've given me ideas and advice, and I have clients, frankly, that have been considering selling their business and have a lot of questions about what we anticipate around the downstream M&A market. So again, we have conversations with our investment bankers, with our broker partners. We get their takes, their sense, and on a case-by-case basis, we walk that through. And remember, while we get through this and we weather the storm, your long-term strategy should be tweaked, but that should still be your North Star. And we should still be thinking about that, and we should still be talking about that, because there is some light at the end of this tunnel.
Great. Eric, thank you. And Eric, thank you for fielding the questions. According to my dashboard, it looks like you fielded something in excess of 22 questions over the last 30 minutes. So really appreciate you doing that. So what I'd like to do now, if you're a participant and you have a question, there should be an icon somewhere on your screen to raise your hand. If you raise your hand, what we will do then is unmute your line and allow you to ask your question. Looks like we still have 47 participants on the line. So does anybody have a question for Jay or for Eric this morning? Looks like Joshua Wang. All right, Joshua, you should be able to ask your question.
Hi, good morning. Thanks again for hosting this session. This was very helpful to us, and I'm sure for everyone else. So my name is Josh Wang, and I'm currently running Patovax, a startup company spun out from Johns Hopkins. I'd like to ask a question whether the PPP also covers 1099 contractors who are very essential to the company but are not full-time employees. Thank you.
Yeah, it's a good question, and there's been some back and forth. We don't have a specific answer to that yet, Joshua, but I do want you to know that this is close on my radar as well, because my father's company is almost exclusively 1099 employees. So as soon as we get some guidance around that, we'll try to pass that along.
That's right.
Josh, thank you. Appreciate it. And Ashok, looks like you have a question.
Good morning. Thank you so much for giving such an informative talk. My question is, when does the process start to apply so we can apply? Because I'm a SunTrust business customer and I wanted to apply. It's good to know that you guys are getting ready and there is a lot of unknown, but there is also a race to apply. And I wanted to see if there is a process you have identified, or do you know when you're going to open up applications?
So, Ashok, it's a great question. The goal that is kind of declaratively been stated out there is tomorrow. Again, there's not a whole lot that it's so dependent on the guidance that we're getting from the SBA in real time, but they have set that goal, the SBA, the Treasury, and now the banks are trying to meet that goal. So best case scenario, that might be when the portal goes live. The best way, Ashok, to get information, and I would actually encourage anybody here to go to their bank's website. So Ashok, if you go to SunTrust, now Truist website, there is something that you can enroll in that will push you real-time updates. And so you put in your name, your email address, your zip code, and the second the applications become available, the portal is live, you will then get notified. That is the best, and a lot of banks are doing the same thing, where on their websites, there should be some way to enroll into a program or talk to your banker directly on how you would get that information. But for us, Ashok, for SunTrust, now Truist, go to the website, enroll into that real-time information update, and it will push you an email as soon as the portal is live and open. Again, the goal that has been declared by this SBA and the Treasury is tomorrow, but a lot of work needs to be done and a lot of things need to happen for us to get that going. So as soon as that happens, that would be the best way to find out if I can get real-time updates.
Thank you.
And let's see, Adam Greenberg, you should be able to talk now.
Okay. Yeah, I own and run 7 restaurants in Montgomery County, and we've had, some of our restaurants, or actually in Maryland, not all in Montgomery County, some of our restaurant sales are down 75%, 80%, 50%. And so we've had to ask some of our employees to keep the restaurants open to defer their pay. And we told them as soon as these paycheck loans come available, we're going to give them their pay plus all their back pay that they've been deferred. We have a payroll coming up next week. Everyone on TV says the money's supposed to get out there in 2 to 3 days. I understand the difficulty of everything. Is there any chance money's going to flow next week?
Yeah, Adam, it's a good question, and the honest answer is we don't know. So we've outlined this morning kind of some details around how heavy of a lift this is, and even this morning the SBA is changing, or they've indicated changing some of the strict due diligence requirements that are going to be on banks, because we have indicated to the SBA and Treasury that it might not be realistic to actually go through this processing at the speed in which they believe it's possible. But right now, we do not know. I read, again, you mentioned you heard on TV. I've been looking at articles for the last couple of weeks, and I read that, on Friday, there have been reports of same-day funding. And and you could apply and get funded the same day. How that would work, we don't know. We know that it's going to be an unbelievable heavy process to do that, but until the SBA gives the banks guidance on exactly what they expect us to do from a due diligence standpoint, we cannot say then how fast the money will flow. The other big factor and variable there, Adam, is the volume. So banks everywhere are expecting a tremendous amount of volume, but it is not. It is hard to predict just how large of a volume that will be. And the larger the volume, the more time it takes, the slower the process gets, if more due diligence is required and more human touch and analysis is involved. So unfortunately, Adam, again, being very transparent and honest here, we can't answer that question because we just don't know how quickly that money would flow. And we understand from your standpoint, the sense of urgency to get it, and we want to do everything we can to make sure that happens from the bank standpoint, but we just can't make a statement or comment on the speed right now. We just don't have all the information.
Thank you.
Are there any other questions? No? Well, Jay and Eric, thank you so much for your time this morning. Again, really appreciate your support, really appreciate your expertise and your knowledge and your willingness to share that knowledge. It's been fantastic. For everyone who's been participating, it's wonderful how engaged you've been. The questions that you've asked have been fantastic. Again, this is the Capital M podcast. It was originally designed and developed to elevate the discussion around access to capital in the Mid-Atlantic. Because of the current challenges that we face, we're pivoting somewhat to address the stimulus packages that are available to businesses throughout this pandemic. And again, I'm Marty Rosendale with the Maryland Technology Council, and on behalf of myself and my partners with Newport, again, want to thank you all and assure you that the Tech Council, as well as my partners at Newport, will continue to provide as much clarity to these challenges as we can going forward. If you're not already a member of the Maryland Technology Council, you can become a member. Just go to our website.